All right. Well, hello everyone, and welcome to our VantagePoint AI live YouTube channel. So glad to have all of you joining us on the very first day of the month, the first day of the quarter, and well, the first day of the rest of the year here. So excited to be diving into some really exciting trends and hopefully seasonal forecasts coming up for this year. There are so many trends in the markets throughout the course of the year, and it's important to understand how to find those types of trends. So that's what we're going to be educating you on today. So super excited to dive into some seasonal analysis with everyone. For those of you who might just be seeing VantagePoint for the first time, if you could just drop in the chat for me whether or not this is your first time seeing VantagePoint, that'll just help me to kind of go over a brief review of everything so that way we're all on the same page. I do see some very familiar names in the chat as well, so welcome to all of our VantagePoint family members who are joining us today. Always a pleasure to have you in the session. And you guys know I am going to be asking for some questions a little later on, but let's go ahead and dive into our initial analysis so everybody's on the same page. Let's just take a look and see who we have in the chat. Hi, Mark. Thank you so much. Jim, great. All right, couple of others coming in now. All right, fantastic. Well, super excited again to have you all with us. If you need more information at any point during the session, don't forget to go to VantagePointForecast.com. I know we'll drop that in the chat as, you know, VantagePoint tries to provide just a plethora of resources for everyone. So today's session, of course, is going to be education based. So whether you're using VantagePoint or maybe using another platform, you're always welcome here. I'm sure that you are going to learn at least a thing or two today. That's always the goal. Hopefully more than that, especially when it comes to seasonal analysis and expected upcoming trends that, well, let's face it, sometimes the market just doesn't want you to know about. So let's go ahead and dive on into our VantagePoint software and get rolling today. All right, so as we take a look in the VantagePoint software, I've got just our initial view pulled up here so we can go over how to use the VantagePoint software. There's a couple of key pieces that we're going to be looking for first. Now, I say first because this is really the essence of the VantagePoint software, is to keep things simple, to keep things confident and confirming in the trend so you have confidence to make these decisions on your own, whether you're trying to look for bullish trends or bearish trends, whether you're an options trader or you trade the underlying asset. No matter here, you're going to get that direction and timing necessary for all those different types of strategies. And so with VantagePoint, really, you are looking for points of confirmation. Again, that confirmation equals confidence in our VantagePoint world, so that way you can stack the odds in your favor. So, oh, thanks, Dean. Perfect. Glad to have you in. I see quite a few of you. Hello, Kumar. Thank you. All right. Perfect. So as we can see here, you'll notice, and again, for our VantagePoint family members, you guys are familiar with this. You know it's simple and easy to read. I want you just to kind of remember two key things. Red typically going to mean bearish, green going to typically mean bullish. So red for down, green for up. All right, so we try to, again, keep it simple, nice and color coded, or you can look for the blue line crossing the black line. So I'm gonna grab my pen here for just a moment, and you can see we have a crossover that happens right here where our blue line crosses above that black line. Now that blue line's the predictive moving average. Keep a close eye on that because that is one of our proprietary indicators here in VantagePoint. We actually have several patents here within the software really helping you to really use that predictive data ahead of time. So that blue line is very, very powerful. When it crosses above the black line, you'll notice the trend turns green, and it stays green and shaded all the way up through our trend until we get another crossover where the blue line crosses below. That's our first point of confirmation. That's going to be the crossover. So from here moving forward, that's going to be known as the crossover. So as we see, we have a crossover of the blue line over black line. Trend turns green. We want to confirm this with some other points of confirmation. Again, I repeat, confirmation equals confidence, right? So we'll look down next at our neural index. Now, the neural index really Oh my goodness, how powerful is this indicator? It is incredibly powerful. This is going to help you better understand price action over the next 2 days. This is on a 2-day time frame. So looking at our trend expectation and then the power of price over the next 2 days, we can see both of these are lining up green, which would equate to bullishness. So here we have 2 points of confirmation giving us a bullish expectation on the trend, at least over the next 2 days. So then we are going to further confirm with additional indicators like our predictive differences down here. Now, the predictive differences, now these are going to measure strength, or you could even think of them as momentum within the trend. So whenever you have a trend that's just starting out, we know that it can be slightly unstable. And so how do you further confirm this growing integrity within the trend? Strength. Right? So when we are looking at a new trend, we also want to see strength backing that trend. And that's exactly what our predictive differences tell us when they're all moving up and in that same direction. So with our bullish trend here, our neural index and our predictive differences all trending in the same direction, giving us nice, good confirmation, nice, good confidence that this bullish trend would be expected to continue. All right, so looking here, I'm just going to clear my screen. We can look for other points of confirmation as well. Now, as we ride through this trend, I've already noted that we're going to continue this bullish expectation as long as that blue line stays above the black line. It's really as simple as that. And then once we get our confirmation to the downside, we're gonna look for that blue line crossing below the black line, confirm that, again, that's check on that first point. The second one going to be that neural index, check, we do have bearishness expected in price, and then the strength of that trend is increasingly bearish. So here we have 1, 2, 3 points of confirmation confirming that bearish expectation. All right, now again, we come back over here. Let's do a few examples here. We've got check, check, all moving up. Again, confirmation on the bullish trend, writing that all the way through until we get to our fourth point of confirmation, which is actually our predictive trade candle. So our predictive trade candle is actually the expected trading range for the day. That's right, I said expected because it is a predictive indicator. That means it's not looking backwards to see what price is already done. That's what these candles are for, right? That's past price action. But helping you to move forward to better strategize and position yourself on the right side of the trend, on the right side of price, we have that predictive trade candle. This is going to give us the predictive high and predictive low for the trade day. And so when we look at that predictive high, you can see that's the top range of that candle. It's shaded in green. That tells us that the next day is expected to be higher. And of course, then the low is down at the very bottom where we see it's also shaded in green, meaning we're expecting a higher low from the previous day. So when you line these 4 points of confirmation up on a trend, you can have a lot of confidence on the expectation moving forward for the future trend ahead. So let me just get out of all of my drawings on the screen. All right. Perfect. And I'm just looking through. I am going to keep a close eye on the chat. All right. So if you have questions throughout the session, don't be afraid. Just type those in the chat. I'm happy to answer those, whether it's a question on technical analysis or maybe if you want to look at a market as well. Towards the end, I'll actually ask for some ticker symbols so we can go live into that analysis with you all today. But if there's anything that comes up during the session, please, by all means, go ahead and type that in. I'm here to help answer any questions that you have on the technical analysis. After all, this is for your education. So I'm not a licensed advisor, just keep that in mind. I am here to help you better understand how to use technical analysis, more specifically the predictive technical analysis here in VantagePoint, like our predictive trend and our predictive neural index, the predictive differences, and of course the predictive trade range. All right, so I think we've got a good assessment on how to utilize the basic really powerful predictive indicators here in VantagePoint. And I say these are sort of the base indicators because these are the indicators that come with VantagePoint. You really do have the power of this predictive analysis here on thousands of assets. So we'll take a look here as well. Yes, it is gray in the middle. Thank you so much for that, Jim. It is gray in the middle. And in fact, you know what? We can zoom in on this time frame. Again, VantagePoint's very customizable, very easy to use as well. Most of you know this for those of you who are our VantagePoint family members, but just in case, we can navigate around very easily in the software. This predictive trade candle, yes, it is shaded gray in the center because this has not actually occurred yet. Right? Now, this is a prediction or a forecast of the range we expect to see for the day. And so we don't have, a full trade candle with our wicks on the top or wicks on the bottom and the body yet. This is actually just a high. This is a predictive high and a predictive low. So if I put my crosshairs right on this predictive trade candle, I'll actually show you, you can find that information right on over here. All right, so we can see that we do have our predictive information where the predicted high is expected to be at 57.20. The predicted mid-range, that means right there smack dab in the middle of that trade candle, is expected to be 56.57 and the predicted low 55.94. Now think about just how powerful that could be in your trade applications, your trade strategy, or your setup. If you are looking at potentially entering into a trend, you may use this predictive trading candle and enter somewhere in the lower portion of that candle. Buy low, sell high, right? Or maybe the inverse for a bearish trend. So when we look at that predictive trade candle, you can use that not only as anticipation for potential entry points where you're getting something at a good value, but you could also look at that as potential profit targets as well, setting stops if you're managing that position. Also, think about setting a stop, maybe a comfortable distance from the predictive trade candle, because things do happen in the market, right? There's no such thing as a, holy grail or, any guarantee in the market. So what can you do to offset some of that risk? Well, you can set stops. And so this creates then a safety net based on predictive analysis, based on intermarket analysis that will allow you to set a more effective stop for your trade strategy and really strategize instead of just guessing or going based off of your feelings, which could be even more detrimental. So I know I mentioned intermarket analysis. I'm going to go on over to the SPY here so we can see not only can you evaluate individual stocks here in the VantagePoint software, but we can also take a look at ETFs. We've got Forex markets, we've got cryptocurrencies. I mean, the list goes on. You can actually see a list of the stocks here and the different markets that we forecast for. We break them up into several different categories as well for those traders who like different themes in the market, such as, electric vehicles, or maybe, I don't know, with where Tesla is right now, maybe we can take a look at that later. But even things like artificial intelligence, you can take a look at some of the themes that we have here, or maybe you prefer stocks that are traded on the S&P, or maybe the NASDAQ, even the Dow, if you're looking for those larger cap stocks as well. All right, so taking a look on over at the SPY. The SPY is an ETF or a derivative of the S&P itself. And so from this, we can gather a lot of information on what's expected to happen for the trade day, just in the markets in general, because understanding what the general markets are doing is sort of the health of the markets here in the US is a really important factor to take into account when you're planning out your trade day or your trade strategy. And so let's just take a look at where we find the SPY right now, because we are at all-time highs, right? And with highs, we do tend to see a little bit of fear start to come into play. And so not only do we have an aspect of greed, but also an aspect of fear in the market sentiment. And so understanding where the market is and what the sentiment of the overall markets are can be incredibly powerful. So if we take a look at our short-term crossover, now I'm going to start to switch through the different crossovers here. Now, keep in mind, VantagePoint's customizable too. So if you find yourself being more of a shorter term trader, maybe you only like to stay in a couple of days, maybe you're only in for a day, that's okay. We've got a shorter term crossover for you, really looking at more sensitive predictive data, looking at a tighter time frame, so that way you can trade based on your own personal strategies and risk tolerances. All right. So if we take a look at that shorter term time frame, we can see we do have some continued expected bullishness, right? We can see that our blue line is still above the black line and the trend is green. If we switch on over to the medium term crossover, this is going to be sort of that happy medium, if you will, pun intended, because this is going to look at really a 2-day time frame, looking out 2 days to see what the trend expectation would be. And we can see here we're still in a bullish state from our medium term crossover. Looking at our more conservative long term crossover here, we can see the blue line still above the black line. Again, slightly different time frame, looking out 3 days ahead. So here we've just looked out 1, 2, and 3 days into the future on the markets. That's really, really powerful when it comes to swing trading. That's why VantagePoint was built for that swing style of trade, because looking out 1, 2, and 3 days can help you to better time and manage and even exit your positions based on data and predictive data at that. So looking at that long-term crossover, we saw that that was bullish. Moving on into the triple cross. Triple cross is probably one of my favorite indicators in the software. I know I'm not supposed to play favorites, but you just have so much information right here on this screen. And better than that, it's easy to use. So I like something that's powerful and easy. Who doesn't, right? That's kind of why we have AI. And VantagePoint's been, using artificial intelligence and applying it to the markets for decades now. So the triple cross, let's walk through this here, because we actually have 3 different predictive moving averages on the screen at the same time, looking to better understand the strength and integrity of a trend. If you want to better manage your positions, the triple cross can really help you with that as well, because position management is kind of where it's make or break in the markets. And so if you see, once this trend turns green on our triple cross, and again, it's called triple cross because there's 3 predictive moving averages here. And so when it turns green and remains green, we do have bullish integrity or bullish strength continuing within this trend. This would give you an expectation of continued bullish strength. All right, green for up. We talked about that earlier. I told you I'd keep it simple. All right, when we see a little bit of yellow, yeah, there's some consolidation there. It means that there could be a little bit of weakness or some risk. And we're seeing that in the neural index down here. Remember, price action. So you're not caught off guard by these pullbacks in the market that we can see happen occasionally, right? Price doesn't move up in a direct line. We do have moments of weakness within the trend. But if you can navigate through that and see it coming ahead of time, you're less likely to make an over-emotional reactive decision. You're going to be more proactive about your approach and really strategize on how to overcome maybe some of that additional risk that you're seeing up ahead. All right. So it's like seeing the detour before you get there. It's kind of like having maps where it says, do you want to take this alternate route? So you can really reassess your strategy and determine what's going to work best for you here and what's going to give you the highest probability of success within that trend. And so here we do see some possible slowing here of the trend. And that's exactly what happened. We had the neural index indicate that, 2 days prior. And so navigating through this trend, we can see it never turns red. And red, of course, is where we would see bearishness. So if you like to short the market, you might be looking for that red area. And hey, for all my options traders out there, more power to you. There is a lot of leverage when it comes to options. So if you want to do kind of more with less, then options is definitely a way to go. But either way, whether you're trading the option or the underlying asset, you need to better understand what the movement of the market is expected to be. So here again, we have a bit of consolidation, but nothing ever switches to red. And in fact, our price action stays above that T-cross long line. And we'll talk a little bit more about that in some other assets as well, because I do want to get to as many as possible today. So we do still see some bullish integrity here within our trend. Could we be slowing as we approach new highs? That's absolutely possible. Why? Because anytime we're at a new high or even a 52-week high, let's just take the year high for it, as an example, that's an extreme level of resistance. And so resistance can have a lot of sort of downward pressure on price. And so if we, in fact, take a look at our support and resistance indicators, I'll go ahead and add these on. There are some additional indicators you can add on to your screen here. But if we look at things like support and resistance, or even taking into account that 52-week look back, let's look at that 52-week high and 52-week low. That would be our 52-week look back right there. We can see we are at a current 52-week high, which we also know happen to be new highs here in the market. So anytime we're at those extreme highs, again, you sort of have that fear and greed battling out with some potential resistance at that level. So would we expect price to potentially stall out or pause here in the midst of our bullish trend? Yeah, absolutely. Take a look at the last time this happened. We stalled, we paused, right? We came back down to kind of rest and reset before renewing that bullish strength. So again, with the VantagePoint indicators still forecasting expected bullishness, we can still see we do have some integrity left within this bullish expectation, but we are slightly cautious, but not overreactive. We're being proactive about that because we saw this ahead of time. All right, so with that being said, I know I said I was going to talk about seasonality today, and I think this is the perfect time to bring that in, because on the SPY, as we see sort of this pausing in price, you might be tempted to overreact or, really start to become very fearful. And that's simply not the case if you have predictive indicators that are going to tell you ahead of time where you should be overly cautious and where you can have a little bit more confidence. And so I'm actually just going to pull in what we would call our Larry Williams seasonal indicator. Who is familiar with Larry Williams? While I get this added, let me know if you've ever heard of Larry Williams. He is actually a legendary trader in his own right. VantagePoint has worked closely with him for decades, and we have several proprietary indicators here with Larry Williams. So I'm going to add his seasonal pattern here. I'm just going to add that back onto our chart here. And I know we took a look at that 52-week look back, but I'm going to remove that just to keep things simple here. Again, it doesn't have to be simple, it doesn't have to be complicated. You just need to have confidence. And so we can see that the seasonal indicator is actually this red line that you see running across the bottom of the screen and all the way on up to the top, right? So this Larry Williams seasonal pattern is actually going to track the price changes over the course of the last decade, really. It actually looks back at 10 years worth of data. Now it can go back further if you want it to. There's always adjustments that can be made to those. Again, customizable, right? But looking back about 10 years is sort of a sweet spot for the seasonality because it gives us enough data without pushing it back too far. You think about what the markets were more than 10 years ago. It was a vastly different landscape than what we're dealing with currently. So you want current data, but you want enough data that you really can get a good reading. And that's exactly what VantagePoint does here. So with that Larry Williams seasonal pattern, we can see that seasonal pattern tracking. Now, you might be thinking, okay, well, great. It's nice to know what the seasonal pattern did. Well, what's expected to happen come July? And that's really where I want to spend a lot of time today. So if we back this out, now here's one thing you can do. Again, whether you have VantagePoint or not, you can see that over the last 10 years, the seasonal pattern on the Larry Williams seasonal indicator, starting really right around July 1st, we really start to see a very strong seasonal pattern starting to take shape. So typically coming into July, we have a lot of seasonal strength or bullish strength coming into this time of the market. And we've in fact had that really since back here in early April, where we started to see this bullish seasonal pattern occurring. And again, this happens over the last 10 years. That's what this indicator is tracking. And so when we see price following suit with that seasonal pattern, well, yeah, if it happens most of the time every single year, why wouldn't you take that into account, right? So as we can see moving forward, we can actually look back at our previous year to see that seasonal pattern and then confirm, did price in fact move up with that bullish seasonal pattern? Do we have bullish seasonal strength here where price is typically moving up during this time of the year? And well, I think guys that we can all see the red line going up, and the trend is green right through till later to mid-July here, until we start to see that pullback prevalent as well. And so seasonal information can give you a lot of insight into potential upcoming shifts within the trend, areas where you might want to exercise a little bit more caution as well, or confidence. So here we can see with our potential bullish seasonal trend upcoming in the month of July, can we be fairly optimistic about some of these trends? Absolutely. But not only can we do this on the SPY, we can also do this on the individual assets as well. So let's take a look at some of those. Now, I know that Hood was one that, oh gosh, has just been on fire here recently. And I certainly don't mean burning down. I mean that it has just been on a tear to the upside. And so let's take a look at where VantagePoint identified the crossover, along with our neural index was green, as well as our predictive differences, all trending to the upside here as well. So nice confirmation from our predictive crossover, neural index, predictive differences. Again, check them 1, 2, 3. On that day, we'd likely also be checking that predictive trade candle to make sure that that was also bullish to get that total confirmation. And once we get that, you've got a lot of confidence within the trend as we continue to trend on up. Now, after you've entered into that trend, you may choose, again, depending upon your risk management and your position management strategy, you may choose to shift over to maybe a more conservative indicator if you are in that trend for a little bit longer term expectation. Again, you can use that T-cross long level as that level of support riding all the way up, or you could even add on those support and resistance levels as well. I'm going to go ahead and put on the support, right? And I'm going to go ahead and add on resistance here as well. So you can see that we have this level of support as well as the T-cross long level. That's what these green dotted lines are. These are all going to be levels of support in green and levels of resistance in red. Now, these are critical pivot points in any trade. So if you're using support and resistance, it's always good to understand where those key levels are and where we might expect to see a breakout. So you might be looking at something like momentum there, as well as the seasonal trend and expectation ahead of time. So let me ask, who uses support and resistance currently? Tell me in the chat so I know if we need to go a little deeper on this, or if you guys want to go a little deeper into support and resistance. I know with our VantagePoint family members, support and resistance is always kind of a hot topic. It's like, how do we know? Are we going to see a bounce? Are we going to see a break? So keep me posted in the chat so I know. All right. So as we continue on, Kim, yes, the 3 line indicators at the bottom, those are the predictive differences. All right. So those predictive differences, you just want those going in the same direction. I can go ahead and, pull those up if you want, but really we're looking at our current day to see what the expectation is ahead. All right. So you just want those moving up in the same direction. Now, as we see, we do have our predictive triple cross here, still bullish on Hood. We were expecting that bullishness. We actually looked at this together if you were on our live session last Thursday for sort of that continued bullish expectation. And lo and behold, we did see some continued bullish expectation. In fact, this market has gone up, exponentially here recently, especially in the light of some news. But fundamentals aside, that expectation was seen way back here, right? When we initially looked at that first crossover and continued bullish all the way up through. So if you'd like to, better manage your positions and know when to stay or when to go, that's where the predictive indicators can really help you navigate through those different scenarios. And so I think what we should do is actually take a look at the seasonality here on Hood and see, okay, well, what is our expectation from that seasonal standpoint? So let me just go ahead and get that turned on here. Okay, so let's take a look. Did we have a bullish seasonal expectation on Hood during our crossover point, right? Yes, we did, right? Our crossover was back here. And for those of you who might have missed it, let me just go ahead and switch on back. Again, that medium term crossover is sort of the middle of the road. So I'll usually use that for for our default. That's in fact the default indicator, in VantagePoint. So as you can see, we do have a crossover, bullishness expected, predictive differences up, and now we can see that seasonal expectation was also bullish, giving us just even more confirmation, even more confidence of this bullish expectation. And so if we actually take this back, and let's just push this back to a 1-year look, we can go back in time to see what the expectation was. And do we have a continued bullish expectation? And in fact, we do. So watch that red line. You're looking at the trajectory or the slope of this line. If that's going up, that's telling you that the seasonal movement during this time of the year is typically bullish. The price is increasing. It's measuring that percentage move by the day and plotting that on your chart. So this is incredibly powerful to be able to see, okay, we typically see a bullish seasonal expectation on through the beginning of July, maybe to mid to late July here. And does the trend typically follow? And we can see that, yes, we do. We see a rising trend here as well. So confirmation, confidence means better execution, right? And that's really what we want to see in your VantagePoint journey, is having more confidence to make your own trade decisions and, maximizing wins and minimizing losses. And, seasonality can certainly be a big part of that. So if we look at something like RBLX, I love going and just looking at the seasonal trends because you can see these shifts coming ahead of time and watch for the timing indicators. Keep in mind, we're never just using one indicator. We're layering these on top of each other. So with RBLX, we can see we have the crossover along with our predictive differences as well. And then let's take a look at that seasonal expectation. Again, I'm just going to turn that seasonal movement on. And lo and behold, look at that. We had a bullish seasonal expectation really starting to take off sort of later in the month of April here, but overall moving up. And this is where we can really see this trend start to take off. And it's done this year over year over year. So past meets present meets future. You've got a lot of confidence. So let's take a look then again back at that 1-year outlook. And again, take a look at this seasonal trend moving up, continuing on up beginning of July. And so that's why it's so important to understand coming into summer, there's a lot of shifts and a lot of rotation that does happen within the sector. So there is market movement from one sector to another throughout the course of the year. July happens to be one of those times where we see a big shift in a lot of sectors and a really big bullish potential push coming from that seasonal data as well. So when you line the seasonal up with the predictive information, again, you just have so much confidence there as well. And I repeat, I mean, I cannot make this any clearer with the seasonal expectation, right? These seasonal moves, big money in the markets, they don't want you guys to know about this. This is where retail traders often fall short, is there's so much information out here for the retail trader. It's how do you use it, and are you giving yourself the advantage of the predictive data and comparing that to this other types of analysis to really give yourself maximum confidence. And so with these bigger seasonal trends, boom, we can see that movement on up and continuing again through mid to late July as well. And we can take a look at a couple of others as well, maybe some trends that are just starting out. If we take a look at PSA here, public storage, right? I don't know. I would have never thought of this as like sort of the hot summer stock, if you will. But if we take a look at our potential crossovers here, now I'm going to switch over to that shorter term crossover because this is an earlier identification of a trend potential here. So we see that we do have that bullish crossover here. Do we have the neural index bullish? We do, absolutely. So we're just, again, going through sort of our checks and balances, making sure that we have those points of confirmation. Our predictive trading candle is bullish as well. So check it, 1, 2, 3, 4. Boom, you've got nice confidence here with your initial predictive indicators. Layer on the confidence of maybe even some momentum or your seasonality. Let's start with the seasonality, just because we've been talking about that. And we can see we do have a shift in seasonality. push that back out 1 year, take a look and see what does this trend typically do during this course of the year. Well, guys, again, I don't know how to make it any more clear than that, but if we look back at past to predict future, that can certainly help us to have more confidence moving forward, especially with those timing indicators moving forward as well. So jump on back in. We can take a closer look at potentially even some momentum to see those shifts as well. So let's take a look at some momentum. Who's using momentum in their trade setup or strategy? For you momentum traders, you swing traders, I'm sure that this is probably top of your list for indicators, but tell me what momentum indicators are you primarily using? I'm going to go ahead and add on our kind of suite of technical indicators here so we can take a look at these together. All right, because momentum is another layer of this analysis, right? Really, you want to look at things from all different angles. You know, an experienced trader would tell you that looking at things from multiple angles gives you the full narrative of the trend. And understanding that narrative can help you understand where the story is moving forward. And so we can see now seasonality. We've got our predictive indicators. We know we have our 4 points of confirmation. Let's layer in momentum into this scenario as well. And so here we have percent R, which is the Williams percent R, which another Larry Williams indicator. In this particular percent R is actually sort of supercharged with some really, really powerful predictive information. So this is a predictive percent R. It is based on a 14 period for those of you who are wondering. And so we see that the percent R is moving up. This is basically telling us that we're sort of stepping on the gas pedal, if you will, when it comes from a momentum standpoint. Is that trend, again, continuing to strengthen from that momentum standpoint? Percent R measures, you know, price to gauge momentum. And then, of course, we have our additional momentum indicators like your traditional RSI, right? And so when you look at RSI, we can see RSI coming back on up and crossing above, coming from that oversold threshold. So when things are really oversold, that tends to be where the buyers reside. And so when things are coming up from that oversold threshold, we have a little bit more room to run potentially in that trend before we hit that overbought scenario. And so with some potential momentum coming in and some room to gain some really traction here within the trend, you know, you've got a lot of confidence. Now, as you begin to manage that position, if you did choose, and again, I'm not telling you to do this, you know, this is simply a hypothetical scenario and an example we're walking through. But if you chose to take an earlier entry, knowing it's a little bit higher risk, you would want to manage your position accordingly at that point. Maybe you enter into a smaller position to start, and then once you start to gain some additional momentum from some more conservative momentum indicators looking for, you know, more strength, maybe then you add to that position as your confidence grows. We can see MACD here being a little bit more conservative. We start to see this shift to the upside. So is it starting to back our narrative, or is it going against it? And so using momentum to again layer on additional confirmation for your trade decision here, along with that seasonal trend shift. And wow, you've got the making for some really confident moves here potentially. And then let's take a look at some others, right? Some other trends that we've sort of seen a pullback recently, but could have started to regain some potential strength within the trend, especially with some potential seasonal moves coming up. So if we take a look at something like Urban Outfitters, right? Urban Outfitters sort of being in that consumer sector, and the consumer sector really starting to move during this time of the year, we can see our crossover happening. We're always looking for a crossover, guys. Always looking for confirmation, whether to the upside or to the downside. So in this case, we do see a bullish crossover. We've got that bullish crossover happening on 626, confirmed with that neural index, and our predictive differences trending up as well. For those of you who want to see that a little bit better, I know we had a question here on the predictive differences. So we can see crossover and all three of those predictive differences moving up at a nice steep angle. That's what we want to see for confirmation, that strength, again, backing that trend, backing that price action. So when we see sort of all things in alignment, all systems go, if you will, then we can layer on that additional analysis to even look for future time frames. How long will this trend last? That's probably one of the most common questions I get in my one-on-one trainings that I do with our VantagePoint family members is, well, how long can I expect this to last? Well, seasonality can certainly help you better understand how long this trend typically runs for during that time of year. Now, that's not a catch-all, right? That's not to say that seasonality is going to be the only indicator you look at. Remember, we're layering, we're confirming with our other indicators. So if we come over and turn on that seasonal pattern, let's take a look. All right, so at first glance, we can see the seasonal pattern on Urban Outfitters. All right, it's trending down. Well, great. VantagePoint expected Urban Outfitters to trend down during this point in time. We in fact see that. If you switch over to the shorter term cross, you can actually see that much earlier, and that's again why we have the various time frames here. Here's our initial cross with all three predictive differences coming down. So if you were in that previous bullish trend, you may be getting out and taking profits here. Maybe you're reversing your position and shorting at this point. Anyone trade options here in the room today? If you do, let me know. All right. I certainly want to be able to provide education to anyone who's in the room. So, whether you trade options or again, you're just a stock trader, again, seasonality can help you better plan out your trade strategy. Anyone ever want to know when to set their expirations? Maybe prior to a shift in the market. Seasonality can certainly help you with that, as we have seen time and time again on our assets for today's discussion. So again, taking a look at that bullish expectation. Now, well, we're coming out of a potentially bearish trend. We know that, right? We just saw that recent shift happen a couple of days ago. So how confident are we that this trend is likely to continue? Again, did price just sort of rest and reset at this point? Take a look at your seasonality. I've got it on the chart. Let's back it up to a year and see where does this seasonality typically move. And we can see bullish seasonality happening throughout the rest of July, coming in, and maybe some consolidation there happening then throughout coming into beginning of August. But overall, we do see a bullish seasonal trend happening through kind of, late July. I wanted to say June. Sorry guys, we're already in July. I know this. It's just the year flies by. But if you want to make the last half of the year kind of the best half of the year, give yourself the power of the predictive analysis coupled with some really powerful, other conditional indicators as well. Take into account the full breadth of the information that's at your fingertips, even as a retail trader. All right, so let's take a look then at some other assets here, as we can see things that have recently had a pullback, because things that have been moving for a while, like, man, I wish I wouldn't have missed out on that trend. Well, don't we all? Right? There's always going to be trends that you miss, and there's always going to be new opportunities in the market. So for everyone that you miss, there's always going to be a new one. So don't sort of have that FOMO. Make sure that you have a trade strategy that works for you and you're following that plan. All right. So let's take a look at eBay, because this is sort of a newer trend that's starting to develop here. And so we see our bullish crossover on the shorter term indication. Again, let me be clear. This is an earlier indication of the trend using the short term crossover. Now, some traders may wait for that medium term confirmation because they want an additional layer of confidence on that 2-day trend expectation. Some traders are okay on the shorter term. They know that it's shorter term until it sort of proves itself otherwise, and that's okay. So as we see, each trader is going to be a little different. That's, again, everybody's trade strategy is as unique as they are. And so looking at a shorter term expectation, we see that bullish crossover with our predictive differences coming up, the bullish neural index, as well as our predictive trade range is bullish as well. Great. We have great confirmation. We already know that. It's sort of rinse and repeat at this point for our 4 points of confirmation. So where do we go from different layers? Let's take a look at our seasonal pattern coming up. All right. Well, we were in this bearish expectation. Great. Now, anybody surprised now to see that eBay went down even after it was on this nice bullish run? we saw clearly that eBay was expected to have a shift somewhere around sort of mid-June, right? So right around mid-June, we see this shift coming. If you're in a bullish position and you see a crossover with a shift to the downside, what are you going to do there, right? Hopefully you're protecting your profits, if nothing else, right? And so what we see then is a shift to the downside. Again, if you want to turn around and short the market, you have a lot of confidence to do that because we have our 4 points of confirmation to the downside here, or bearish. So with a bearish expectation. Now, again, coming current day, let's reach back a year to see where that expectation is taking us moving forward. And we can see that really starting July 1st, there I go again, saying the wrong month, but July 1st, we really start to see this bullish expectation starting to move pretty rapidly. And we can see that that trend really starts to take off as well. So could we potentially see some seasonality come into this asset? Well, we're seeing it already. And could we potentially see that bullish trend continue with additional confirmation, right? Now, again, I said this is an earlier identification of a trend. For some, that might not be enough confirmation. You may want to see that additional crossover. You may want to see some additional momentum. So let's take a look at that momentum as well. Let's grab that MACD. Let's grab the RSI. Let's see. I'm just going to hold control so I can add these all at the same time. And here we are. There we go. So let's take a look at our shorter term momentum, because that's really what we're seeing right now is a short term expectation at this point with a potential longer run based on that seasonal shift in the trend expectation. And so we have %R, right? Moving up from its oversold threshold down below. So that tells us we have some room to run with that %R and that momentum really starting to step on the gas. Our stochastics, again, another very sensitive momentum indicator, also shifting to the upside, giving us our stochastics %K above the %D. Again, if you're not familiar with the momentum indicators, then that's okay. We're here to educate, and these momentum indicators are more sensitive. They're built for kind of earlier identification of that momentum shift. And so we can see stochastics also confirming bullish expectation in momentum. And we can then look down at our RSI and see that continued bullish expectation coming from that oversold threshold. So again, this is sort of where buyers reside. And so with that potential shift on to the upside coming from momentum, seasonality, as well as trend confirmation from the predictive indicators, we've got a lot of confidence there within what VantagePoint is predicting and forecasting ahead of time. Now, of course, manage your position accordingly, right? Make sure you're managing your risks. Again, I repeat, this is an earlier expectation here. We would then, of course, for additional confirmation, look for something like a crossover and bullishness on our predictive MACD. This is just a bit more conservative of a momentum indicator. So using these as they progress, man, so powerful, not just in your entries, but also your position management and also better timing your exits as well, using all of these different predictive pieces of analysis. All right, so let's take a look. I'm going to jump into the chat here for a second. All right. Kumar, it looks like we covered those momentum indicators, and I just saw that. So thank you for typing those in. And I think we were on the same wavelength, my friend. So looks like we covered those momentum indicators. I don't know. Leverage could be your friend. It just depends on what side of it you're on, right? Yes, very true. All right, so let's and that's the power and VantagePoint. It's just, looking for to be on the right side of that leverage. and the predictive data can certainly help you with that. So go ahead and let's, I was just making sure that I answered most of everybody's questions today. I'm glad we got a chance to dive into not only seasonality, but also momentum from that standpoint as well, because coupling that up together using the predictive analysis is really, really powerful. Again, whether or not you're using VantagePoint and the predictive data, or you're using some variation of these indicators in your own platform, that's fine. You just have to make sure that what you're doing is really layering and stacking the odds in your favor. And that's really the key to confidence, is making sure that you are stacking the odds in your favor, making sure that you stack those probabilities. All right, so let's take a look at some ticker symbols. I know that you guys had typed in some earlier. I'm going to try to go back and look, but if you can, go ahead and type in some ticker symbols. I'm going to go ahead and take a look at some others that were typed in a little earlier. And as you type them in, I'll try to pull them up. We've got a few minutes left here, so always love to dive into some different types of analysis. Let's look at Duke Energy was one, and this is in a different sector too. This is energy, so thank you for entering these. MSFT, sure. Let's see what others we had. All right, I tried to take note of some of these. I can't remember them all, so I'm just going to look through our chat here as we go. Oh, sure, Burke, absolutely. Love it. Thank you. You guys and your comments really are what makes these trainings so powerful. And so thank you for sort of your participation and everything. And while I'm doing this, while I'm opening these up here for us, if you could do me a huge favor, if you haven't already typed in your ticker symbol, do that. But then also Jack in the Box. All right. And do me a favor, just like and subscribe on the channel if you have not already. That way, whenever we have these various training sessions, you'll get a notification. We have so many training resources here on our YouTube live channel. So make sure that you like and subscribe to the channel so you can take full advantage of all of those resources. Like I said, whether you're a user of VantagePoint or not, we're always trying to provide additional education for really every trader. Retail traders, you guys deserve access to resources and information just as much as the professionals out there as well. So certainly do yourself a favor and gather as many resources as you can and let VantagePoint be one of them. So if you need more information on VantagePoint, go to that VantagePoint forecast.com. I know we've dropped it in the chat a couple of times, so we'll keep doing that for you guys as well. I know several of you have asked for it. All right, looks like we've got some ticker symbols on in for the session today. So let's jump on into the first one that was pulled up. Let's look at Duke. So Duke looks like it's been in a channel for some time. We can see, now I mentioned support and resistance levels earlier, and I think I said that these sort of act as pivot points within the trend. And so here we can see where these pivot points have just gotten really close, that we've almost got this sort of ping pong effect, right? And so if we take a look at this channel that we see between support and resistance, here's your resistance right up here in red, and then your support down here with our green arrows. So resistance pushing down, you can see the impact by the arrows, and support rather pushing up. So whether you want to call it, ping pong or pickleball, would it take your pick at this point, right? I'm not very good at pickleball though, by the way, but here we can see just that bouncing back and forth between the trend, between the support and resistance levels. And so when you see something like this, it can be kind of a what do I do here type scenario. When is this likely to break out? And what this is doing is, when we see a channel like this, oftentimes we'll see a breakout afterwards, because it's sort of like storing some energy here. No pun intended there, because this is an energy company. But what we would need to see then is a potential break of the support or resistance levels. And so here we've come up to test resistance again as well. You can see yesterday we tried to break above that resistance level. And when I say that, let me just zoom on in so everybody can see a little closer. You can see price tried to break that previous resistance level here. See how we've got a wick just within that range. And then we also have a close above that resistance as well. Now, for those of you who are familiar with support and resistance, we typically would want two closes above a level of resistance to confirm that potential breakout trend. And so with one close, we just don't have enough quite yet. But again, if you're looking at a potential earlier entry, we can also see that we do have a bullish expectation here as well. So here we're assessing for risk as well as profit potential. And that's a key point. You never want to look at just one side or the other and ignore the other. You want to look at both, right? You want to look at both sides of the coin. There's always risk with profit, always profit with risk. And so as we can see, we do have some risk up against resistance, but could we potentially see that breakout with our trend turning bullish and some nice confidence coming from our predictive moving averages, our neural index, our predictive differences, as well as our predictive trade candle. All right, best time frame for the day trade. All right, so that would probably be the short-term crossover. As I mentioned, short-term is sort of the most sensitive predictive indicator. This is looking over the next one day. So if you have that predictive moving average trending up, and you have a nice predictive trade candle as well, this can help you to better assess for that positioning, especially if you're looking at potentially entering in towards the lower portion of the trade candle as well. Now, where exactly you place that entry would totally be up to you as the trader, but knowing what the expected range would be for the day can be, just such a game changer when it comes to assessing the movement of that market for the day for those potential intraday movements. And so that would be my answer to that, is look at the most sensitive indicators and couple that up with sensitive momentum as well, things like percent R, RSI, to make sure you've got good momentum moving in that direction as well. But you also want to look at an established trend and where things are shifting, whether you're at a day trade standpoint or you're coming from a swing trade or maybe even a longer term position hold as well. And so let's take a look at Duke then. I know we're looking at seasonality, so let's add seasonality to this mix also. I'm going to back this out just so we can see the seasonal trend. And so we saw Duke coming down, right, from a seasonal standpoint. Okay, and we can look and see, does Duke tend to follow this seasonal trend? One thing you can do is, in fact, we've looked at the predictive moving averages already. So we could, in fact, take off and just look at price action to see, does price action typically tend to follow that seasonality? And, well, seasonal goes up, the price goes up. Seasonal goes down, the price goes down. It's really this simple. Seasonal goes to the side, the price goes to the side. And so do we see this market typically following a seasonal trend? And I would say, I would argue yes at this point, right? So let's back this up, in fact, and look back 1 year to see where this is expected to move from a seasonal standpoint moving forward. I don't think there's any question that there is a potential bullish seasonal move coming up on this asset. Now, of course, you'd want to line that up with timing indicators, okay? No guesswork here. It's really lining things up with the predictive indicators. And we can see, even if we push this chart back further, I'm just going to push things back a little further, that we saw this coming out of that downtrend previously with some consolidation happening here. And so we look to see that downtrend with consolidation potentially coming into an uptrend with that seasonal move, potentially lasting on even a little longer than what we've seen thus far into around mid-August. And so, a lot of potential energy within this trend. And yes, that pun was intended. But looking at these seasonal timeframes can really help you to better understand when these major shifts are likely to occur. Microsoft was another one that was asked for. So we'll go ahead and assess from that seasonal standpoint. If you guys want to look at any other indicators here on these assets, we can certainly do so, like with the momentum and things of that nature. But since this was seasonality, I will go ahead and take a look at that first. So taking a look at seasonal from Microsoft, gosh, we have had quite the run on Microsoft recently, haven't we? VantagePoint picked that up back here. Seasonal was expecting a little sooner. And again, this is why you want to time this up with those timing indicators as well. You could have maybe gotten in right here with the predictive differences, your neural index, and that trend in fact did work out. We had a little bit of a downturn. We all know tariffs, things of that nature. So there are still going to be some plays like that in mind. But really our biggest bullish seasonal move, we had that shift to the downside. Our biggest bullish seasonal move started right there, and we can see the trend really starting to take off and gain some major traction right there. Again, looking for those 4 points of confirmation, predictive differences, seasonal expectation of bullishness, lasting till when? Well, we see this trend previously lasting until kind of beginning of July, maybe a little bit. Now, again, keep in mind, this is an average of seasonal movement over the last 10 years. So it's not going to be to the day, but looking at those specific timeframes where we would expect to see those larger seasonal movements, I mean, I don't know what more you could ask for. As predictive data, seasonal data, momentum, just so much power right here in the software. And again, keep in mind, whether you're using VantagePoint or not, layer that confirmation so you have the confidence to really strategize around that movement. What is the expectation? How long do you expect it to last? Where should you maybe even set strike prices? The predictive indicators can certainly help you with that as well. So let's take a look at BlackBerry. Now moving on through, we can add that seasonal expectation. All right, so we are starting to see some potential seasonal shift. I always like to back this up a little bit further to see, does this market tend to follow the seasonal pattern? And recently we can see that it did, right? We did have a downturn expected, didn't happen right there. So again, if a market doesn't follow a seasonal pattern, you just want to be a little bit more cautious about reading that seasonal expectation. That's why it's important to look back at the trend. And if it follows that seasonal expectation every year, then great, you have a lot more confidence. If it doesn't, that's okay. Move on. Use your other predictive indicators. That market just might not be seasonal during that aspect of the year. So let's go ahead and take a look. We can see that bullish seasonal expectation, a little bit of sideways movement coming up through July. So I'd be, cautious here on seasonality, really focusing on our other predictive indicators at that point. So let's move on to Jack in the box. All right, this one looks like, all right, it's had a run to the downside, hasn't it? For those of you who like to short the market, I hope that you were looking at Jack in the Box here over the last month. But let's take a look and back this out. We'll take a look. Looks like the last 6 months maybe, except for during this period. But let's take a look at that seasonality. We'll just add that right on. And here we can see we do have a market that typically does tend to follow a fairly seasonal pattern. Again, we're not looking for price to reach this level. We're looking at the shift in direction. All right, so here we can see with that seasonal pattern, again, I already mentioned it's not going to be to the day. All right, you're really lining up this pattern with the timing indicators to make sure that you have good confidence and good confirmation. If you have a market that typically trends down and you get a crossover to the downside, what is your expectation there? Probably not bullish at that point, right? At least I hope not. If you're reading the indicators correctly. And if not, that's okay. We have VantagePoint University. That's what our instructors are here for as well, to help you. Again, we provide many training resources to our family members. But again, shift to the downside on Jack in the Box. We weren't, surprised by anything that was happening there. Jump back to a 1-year outlook and we can see that, okay, well, we do still have a bearish seasonal expectation till right around mid-July and then really starting to pick back up. So will we see a crossover come, mid-July? If we do a crossover to the upside, you might have a lot of confidence in that shorter term move, possibly even through early to mid-August, depending upon our predictive differences. In this case, that move lasted about 2 weeks. All right. So let's just take a look and see from that seasonal expectation and our crossovers. I'm just going to go crossover to crossover to keep it simple here. But you have almost a 15% move in 16 days. Those are what make for consistent movement and consistent movement in your account, right? Of course, no guarantees, but everybody's a little different in how they trade things. But if you're looking for consistency, then set yourself up for success using predictive data here and full comprehensive analysis. All right. So looking at LNC, we can see this is going to be our last one for today. I see we're already over sort of our hour mark, but that's okay. I'll hang out with you guys for a little bit longer if you'll take me. So we have LNC here, and of course we'll switch up to that 1 year outlook. Let's go ahead and add on that seasonal pattern so we can take a look. All right. So we can see, all right, bearishness, but then we start to pick back up beginning of July. So will we be expecting potential bullishness? There's a good possibility, right? We do have some bullish seasonal movement happening here in this particular market. And then, of course, we do have a bullish crossover already. So will this continue? It's a possibility. We did go against the seasonal here, so looking like picking up this trend maybe slightly earlier. I'd watch that very carefully. But of course, as I mentioned, there's so many types of opportunities where you can really line up the confirmation with the predictive data. We looked at something like Duke where we already had the crossover and the bullish seasonal expectation. We looked at Microsoft where we can identify these trends earlier. We looked at several different areas of the market, even like eBay, where we're starting to see this earlier potential of a trend. And so evaluating markets from several standpoints, whether it's seasonality or momentum or maybe even institutional movement. If you were with us on our last session, the comprehensive analysis paired with the predictive data and analysis here in VantagePoint really gives you an edge that retail traders really need in this world of professionals. So if you can be, position yourself on the right side of that movement, there is so much potential to have so much success in the market. So again, if anybody has questions about VantagePoint, I know we've dropped that link in the chat. Make sure you like and subscribe to the channel because we will be, giving additional training resources here on our YouTube live. And it's always great to have you guys in our sessions. So again, whether you are a VantagePoint family member or not, it was great having you here today. Thank you so much for your input in the chat and your feedback as it was coming in. I really, enjoy going through those live analysis with you guys and seeing what questions you guys have about the market. So we'll see you guys on the next training. Have a fantastic rest of the day and happy 4th ahead.